Management and Virtuous, that's APG is a Dutch company, Dutch pension company, and Virtuous Retail, which is sponsored by the Xander Group, have tied together to form a $450 million joint venture, creating India's leading fully integrated retail real estate company. So they invest in retail real estates. Sid Yog, the founder of Virtuous Retail, has joined us on the phone line. Sid, good morning. Thanks a lot for joining us. You have said in your press release that APG and Xander have committed to an additional $150 million as equity capital, which will give you all some $300 million more to $300 million to play with. Will you be buying only Xander's assets, or with that extra $150 million you will buy some market assets?
Hi, Lata. Good morning. So let me clarify firstly. Virtuous Retail and APG have bought out 3 assets which were owned by Xander, a previous fund, but were developed and managed by Virtuous Retail itself. So Xander has many other retail assets. This partnership has not bought out any of those. The partnership is limited in its strategy to have ownership and management rights as the VR brand. So that's the first clarification. The second piece is the additional equity that has been committed, which gives us investable capacity of about $300 million to start with. We'll look at any and every asset in the wider space. This is going to be an exclusive partnership between Virtuous Retail and APG for retail real estate in India. We would look to invest in control assets where we could either buy out existing assets and reflag them as Virtuous Retail assets after restructuring them. Many of them will require restructuring. Or we could develop greenfield assets where we start from scratch and build out new centers in the locations and cities we would like to be in. Or it could also be in joint venture with other developers or institutional capital partners, frankly, because many investors or institutional capital partners may acquire assets but don't have the ability to flag them and manage them. So think about this as an integrated retail real estate company, much like a hotel company, which could own and operate its own assets.
Sid, hi, good morning. What is the structure? I mean, so we in real estate, we've got new structures which are getting a lot of interest. REITs, for example, is one. So this is not on those lines, right? This is a real estate company which will own commercial property, to put it very simply, right?
Well, I don't know what the difference between a commercial company and a real estate REIT is. This is like akin to a private real estate REIT.
Private real estate.
So in the U.S., if you think about the United States, REITs basically have management internally. So the assets and the management all sit within the same structure. And it could be a private REIT or it could be a public REIT. In Europe and in Asia, especially in Asia, you see more where the assets sit in a separate structure and there's a separate management company and there is a management contract between the two. So this is more akin to a U.S.-style REIT where the management and the assets all sit in one company. There is no friction. It's an integrated end-to-end developer, owner, and operator of assets. This is about 150 strong management team, 3 assets that have been bought out 100%, owned and flagged by Virtuous Retail South Asia, and so it's very much like a private REIT.
Sid,
or a real estate company.
Yeah, with this extra money that you are going to pick up, will you be looking at assets of listed companies?
Lata, we are happy to look at any and every kind of asset as long as it meets our quality criteria, our location criteria, our legal criteria, and obviously is, from a risk-adjusted return perspective, attractive.
These 3 assets that you've bought, could you tell us which are these? We have the cities, but are these,
sure.
top-of-the-line AAA assets, or are these, fledgling assets which kind of you need to turn around, rebrand, etc.? Go on.
No, these are top-of-the-line assets. It's VR Bengaluru, which is located in Bangalore. It's about 1 million feet, integrated lifestyle destination that launched last year. It's been very successful. It's anchored by H&M, by Muji, by Forever 21, international brands. It has a boutique hotel. It also has co-working space, but it's anchored by retail. About 500,000 square feet of that is just retail in the prime market. So that's the first center. The second center is 3 years old. In Surat, it's Surat's leading center. It's about 600,000 feet. So it's the city center. It is rated the #1 destination, tourist destination in Surat, by the way, not just retail destination. Anchored by Zara, by Shopper Stop, by the leading brands that you can think of. And the third asset is in prime infill location in Chennai, Anna Nagar, where there is no other asset. It's about 2 million feet. And we already have, it's going to be operational next year in September, but we already have signed leases there with the likes of PVR and Lifestyle and, other leading international and local domestic brands.
Okay. Well, good to hear that. Sid Yog, it was a pleasure speaking with you. Thank you very much for joining us. So that is